So, Amaya, can you tell us a little bit about yourself and how you got involved with investing?
Yeah, sure. Uh, yeah, so I live and work in Germany, and I have been associated and working in depths and breadths of technology since quite a while now. And I got introduced to investing partly because of my mother, who used to ask me to track some of the companies back then on TV channel and ask me and note down some of the prominent names and then update her after a couple of weeks which stock is going up, which stock is going down. My uncle also was a very active trader in markets back in 90s. So that was the initial introduction I kind of had in the investing space per se. And since I was very keen and kind of a technology aficionado, I always found it very interesting the kind of work that Indian listed companies were doing. So that kind of set the initial context. And it happens, right? So when you start working, if your friends are also investing or they have a specific line of thought, eventually you follow. So what happened is in 2006, I started working after graduating. And the first thing I did along with opening the bank account, is also open a demat account. And since then, it has been quite a roller coaster ride.
Amazing. And so I read that you've also worked for some of the tech and ER&D listed players in India. So what was that experience like, and how has it helped you develop, a very deep understanding of how these sectors function?
Mhm. Yes. So not exactly on the ER&D, but I started my career with L&T, and very soon I was moved into their software vertical, which we know now LTI. It was L&T Infotech previously. So that was my first entry professionally. But I have always been fascinated to coding or programming. Okay, and when I was in engineering, I did my engineering in electronics and telecommunication. And while most of my uh, classmates were doing projects into more into embedded systems and chip designing and SCADA used to be the thing back then. So SCADA system and geospatial tracking and so on. I did my project in a digital signal image processing, which was primarily very, very software heavy. So I had a very steep inclination towards programming since very early days of my career. So before getting into software professionally, I was kind of an avid programmer even before that. Uh, and because of the entry into the software, what happened is, see, there are two things usually happen to anybody who joins an IT company, right? So it's not in your hands what technology you would be put into. Some people are put into software development, some are into the mainframes, some are into the enterprise, some into UI development and scripting, some into the networking. So it's not necessarily in your hand where you would be asked to work, right? Uh, but what I used to do is during the initial 8 hours of the day, I used to work wherever they asked me to work professionally. But once I got home, I used to sit and do programming in the space which I loved the most, which was back then used to be the UI and theme designing for WordPress websites and plugin designing in PHP and bits and pieces into the digital and audio processing. So I also developed a plugin for
Your voice is breaking a little bit, Amaya.
file by 10 times. But at the same time, it would maintain the quality. So it was kind of an inclination that I had since the beginning, which kind of gave me engineering companies who were client of L&T back then, it kind of gave me a little bit of understanding on how ER&D space operates and how IT space operates. And then I had a couple of failed startups, and one was very recent. So because of all these initiatives that I was involved into, it kind of gave me a domain, how would say, the bird's eye view on the entire value chain of the technology, be it enterprise R&D or the traditional IT outsourcing or IT consulting or what we now looking at the digital transformation space recently. So that has been so far the journey.
That's pretty cool. So I'm very curious how you, with all this focus on technology and having worked in technology, the circle of competence in technology makes a lot of sense.
Mm-hmm.
How did retail come about?
That was kind of a professional extension. So I worked on many retail companies across Europe and US because of my professional engagements. And since the technology was always my forte, and retail kind of came in as a professional baggage back then, which I hated, to be really honest. But since what happens is once you work on a one specific industry and you successfully deliver that, your company expects you to deliver another project and then they start calling you a subject matter expert or the industry expert. And once you get that tag, you kind of get attached to that particular segment for a long, long time. And that's what exactly happened to me. So I delivered some of the largest pricing automation and the promotion and rebates management programs for Europe-based companies. And eventually I landed up working for Europe's largest retailer now. So, so that's more of a professional extension, I would say.
Pretty cool. So both these areas are spaces where you have got some like real world expertise, and then you've decided to stick to them. I think you're one of the few people who I've come across who's taken circle of competence to such an extreme level. Do you feel like that not having other sectors or not looking at other sectors, uh, even even while not having the same level of competence in them, means that you're missing out, or have you done okay regardless of not looking at other sectors?
Okay, so there is a little bit of different context to this. So I was not always very heavy on IT or technology and retail during the early ages of my investment journey. To be really honest with you, until 2015, I don't even remember if I held any IT stock for more than a year in my portfolio. I was always scattered, I was always diversified into various different sectors. And what happened is in 2016, I believe there was a massive uh, crash in mid cap and small caps. And since I had experienced a crash before in 2008 very heavily, and I went almost bankrupt then, it dawned on me that probably it's not a good idea to get into domains that you don't really understand. When a stock is rising, you think that you understand the company way better than promoters probably. But what happens is when a particular sector is facing a headwinds, you really can't anticipate when those headwinds would get converted into tailwinds. And because of that, you don't develop the patience and the conviction to hold the stock. Uh, and that's what precisely happened to me in 2016 odd when I held a lot of different stocks. I don't even remember the names now, but some of them have gone on to become huge multi-baggers. Porsche, HIL, Gufic Bioscience, and Cabra Extrusions, and Orient Wells. So if you see, none of these names are from the technology and a retail side. One thing I did good was the moment DMart got listed, I ensured that I bought on the first day itself with the right allocation. So it's a journey that everybody goes through. So you discover certain things first and then certain things later on. What I discovered initially was the diversification for me as an investor was not really going to work because if something is not working out, I have no clue over why it's not working out. So I would always go and ask my friends, hey, I bought this stock. You're from this sector. What do you think of it? So I'm always dependent on somebody. And I hated that. I wanted to be in the segment which I understand deeply. I would not have any trouble holding a stock, even if it's like 50% down since my buying levels, and still I can sleep peacefully. So that was one reason to stick to my own, circle of competence. And I got that initially a lot of feedback from some of my friends who said, since you work in the technology, you would develop a bias towards it, and it's not really a good idea to invest in technology stocks since you work professionally in technology. So there is possibly a bias. But surprisingly, what I have seen is people who are from chemical industry and who have spent like 15, 20 years in chemical industry or similar number of years of experience in IT industry, they don't really have, chemical heavy or IT or technology heavy portfolios. Surprisingly, that's what I've always noticed. And from 2008 until 2014, I always somehow had, good stocks in portfolio, but the allocation was a problem. So since 2016, I made that change very strategically that I'll stay within the businesses that I understand very deeply. And if I'm asked to speak with a CTO or a CEO in a investor meet or an analyst day, I would be able to ask right questions to them. I should not sound very naive.
Cool. So you mentioned about how you've developed this understanding and this competence in these two areas. How did the trading of Nifty and everything else that is tradable start?
uh, okay, so that was because of one of my mentors. And again, it has kind of a background where I always used to buy a stock at a high. Okay, and I always kind of used to go back and ask my mentor, "Hey, I bought this stock at this level. Do you think it will come at this particular level so that I can buy it again?" So it was again kind of a same line of thought. So I hated dependency for anything on anybody when it comes to investing specifically. I mean, you can always rely on your friends for advice or a second opinion. But when it comes to businesses that you hold, it's always very important that you are on your own. Okay. And that kind of made me think that probably I need to learn a little bit of technicals here and there. And I developed a very keen interest into it. And then I developed my own setup and I started trading it. I found some pretty cool strategies that those were working for me as a trader. And of course, I had some time back then to trade, which I don't now. So it's been a long time since I haven't traded. But my Nifty master chart setup, which I use primarily just before the budget, so that's only one trade in Nifty which I take every year. So right now it has gotten down from trading Nifty every day to trading Nifty just once a year. So I think it gave a good perspective in terms of the broader trend of the markets. So I think every fundamental investor should have at least fair bit of idea you know about the broader market, so that you can stay in. Because I see people a lot of times they let the external noise dictate their actions. So that's how it has been. So I don't trade Nifty that frequently now because I don't get time, but I trade one time a year, which is just before the budget. That's what I do now.
Very interesting. I obviously have no knowledge whatsoever about trading, so I wouldn't know how that works. But so let's move back to your portfolio then. How does your portfolio look right now? Is it split 50-50 between tech and retail? Uh, Also, how many stocks? You spoke about concentrated.
Mhm.
So, what does that look like? Because for some people, 15 is concentrated. For other people, 8 is concentrated. So, what does concentrated look like for you? And how do you split it amongst the sectors that you're tracking in?
Right. So you described that for some people 15 is concentrated, for some 8 is concentrated. So if I go by that definition, then I would be ultra concentrated. Um, until last year, the tech allocation in my portfolio was more than 65%, and 25% was in retail, and the rest of bit was in some other stocks. So how I look at a portfolio composition is I always pick a company. Exception is Recent exception is only Neogen Chemicals, which I bought because some of my friends had pretty good understanding on the company and their operation, and they thought it's a very good business to own, and the valuation was also pretty decent. So that's only one of the exceptions in my portfolio for which I'm dependent on somebody. But in terms of rest of the stocks, what I always try to look at is what kind of a technological edge a given company has that I can study. So, for example, if you look at Bajaj Finance, which I have in my portfolio since quite a long time, I don't look at it as a lending or a financials company. I look at its technology stack, and I like what they do in terms of the the internal technological capabilities that they have built, and I own them because of that. So my portfolio right now is about 7 to 8 stocks, and they are all primarily technology specific. So I own L&T Infotech, LTTS since IPO times. I also have Root Mobile, Tejas Networks, and Tata Communications, which I have added very recently. And in retail, I have only DMart, but the allocation is now pretty decent. I'm not looking to add that further down the line. And the only other stock I own is the Neogen Chemical. And I also have some allocation to Newgen, primarily for their low code offerings and the supply chain offerings, which I like very much. So the always what I look before owning a company is, uh, can I call it an ed tech, for example, or a health tech, for example, or retail tech, for example. So unless technology is involved, I'm not really keen on owning that business. So I'll give you an example. So I work with a company here in Germany. It's a retail giant, and if you go a decade back, you would see that this company literally dominated the market in terms of market share. But they were very slow on adopting the technological changes, and that impacted on their market share. And this is how next 10 years are going to look like. So any business who is not adopting technology in their operational, to fix their operational inefficiencies, to be closer to their customers, to anticipate how their customers would react in what situations. So if you don't have that nearness with your customers, right, it's going to be really challenging. So that's what a key theme is. So I always look at, is it a retail tech? It is a fintech? Is it a food tech? So tech has to be always there somehow. And company has to be serious about their tech. It's not that building a simple chatbot and you call it an intelligent RPA or an AI enabled conversational agent. That's not a technology adoption, right? So it has to be a real deal. So that's what I look at, and I am very technology heavy in terms of holding all these companies, and I go by a theme. So when I bought IEX, it was primarily because of their platform. It had nothing to do with the power sector reforms or the power discovery or anything else. So I was lucky enough to have a sneak peek into their trading platform that they have. I was lucky enough to look at their technology stack. I understood that, if there is ever a moat in this segment, then it is this platform. It has nothing to do with anything else. Of course, the power sector reforms would come in and disrupt, but you just can't replicate a product and a platform that a company has developed over past many numbers of years. So I always look at whether a company is adopting a technology or not. I hope I answered your question.
Yeah, absolutely. I think, on Twitter, I've had the privilege of knowing a bunch of people who look at businesses not so much as a financial analyst, but as a business analyst. And I see that, those people always turn out to have the richest and deepest insights about competitive advantage, because it's just those things that, you can see the output on in the numbers that you can that are there, but the thought process, the technology, the quality that they're building. I think once you understand those things, your level of understanding around those businesses is just in another level altogether. So, Amaya, ever since I announced this space, one big, question that has come almost non-stop from my followers has been to ask you about comparing LTTS and Tata Elxsi from a business standpoint. I'm sure you've also got this question a ton of times.
Yeah, a lot of times.
So would you be able to do that for us here today?
Yeah, sure. I'll try to, based on what I understand about these two businesses. So, as you all already know, that the ER&D space is a little different from traditional IT space, right? So your contracts are a little slow to come by, but the contracts are very sticky, and that gives you an opportunity to develop an account, a normal project into in a account. So initially, you get a project, you convert that into an account. So an account usually has 4, 5, 10 different projects going on for the same customer, and then you grow that account into a strategic customer or strategic account where you are the primary vendor for a given line of business for that particular company, right? So that this is how the ER&D space is different from the very beginning itself. And the focus of Tata ELXSI initially was a little bit different. So if you see that they were involved in a lot of animation and the VFX related things. So if you look at the Tata ELXSI's business and L&T's business, there is one key differentiator between the two. Sure, there is a lot of overlap now in terms of the offerings. So if you look at the telecom offerings or the health of the industries that they now serve, healthcare, telecom, and media. Also, the new initiative that LTTS has taken over, which is primarily in the mobility and the always connected paradigm. So the service overlap is definitely there, but there is one key differentiator between the LTTS and Tata ELXSI is the supply side excellence. And when we say supply side excellence, is you must have already heard about this, read about this in a lot of different interviews and so on. But I'm giving you what I have seen within the L&T as a group of companies. So what happens is, L&T, since it operates into various engineering segments, heavy engineering, plant engineering, factory automation, and so on. So there is huge availability of the supply side talent, which is currently available at the LT side. So what happens within the L&T as a group is they don't have silos. Okay, it is very easy for them to move a person from one company to another company within very short span of time. So let's say you are implementing a very specific project for a hydrocarbon company or an oil and gas company. Uh, since L&T already has engineers working in that particular segment, what they do is they either move the person. It doesn't happen now, but since the companies are listed, but what happens is they have lot of internal synergies among the different companies that are currently listed. So if you open the the results or the annual report from LTI, LTTS, and L&T, you would see that if a project is received on L&T side, there is a lot of consulting work that LTI and LTTS does. If a project is on LTTS side, there is a lot of supply of engineering consulting related activities that happen through L&T as a core. So that excellence is something, and the parentage benefit that LTTS receives is tremendous. Um, Tata ELXS, on the other hand, is a little bit of matured business. They have seen through multiple cycles of the technology developing, right? So from embedded systems to VFX, then back to embedded systems, and now primarily focusing on value-added areas. So if I have to sum up in one line, and not to extend this beyond a point, you would not regret investing in either of these companies, to be really honest with you. Uh, I am not a valuation expert, but I surely can know uh, if there is a value in the service offering or a product offering. So how these companies differ is basically they simply go and plug and play their platform, and they enable customers digital transformation or the enterprise transformation journey within very short span of time. So the accelerators and the rapid deployment tools that LTTS has developed is growing at a very rapid space. So what happens is, because of their engineering parentage, they kind of end up developing a consulting framework, which is then reused by their peer companies, which is LTI or LTTS, whenever they are catering a specific customer in the ER&D space, right? And when they are ready-made, they have a ready-made consulting framework. It's really easy to focus your technological development on that aspect. So this is how I see LTTS is a little different from Tata ELXSI. But valuation-wise, you all are far better experts than I am. But the one line to sum up is, no matter whether you are holding Tata ELXSI or you are holding Tata LTTS, the amount of ER&D spends that would be coming in next 4 to 5 years would be tremendous. So you would not be really disappointed to hold any of these companies. So if you look at Cyient, for example, Cyient also has a certain ER&D expertise. Even Infosys has certain ER&D expertise. So the budget spends which are now getting available, India is really well positioned. Amount of ER&D spends that would be opening up in next 4 to 5 years down the line is going to be very significant. And there are very few players who have positioned themselves strategically to take advantage of this. So regardless, you are in LTTS or Tata ELXSI, you're not gonna repent it, right? So it's completely up to a person whether you understand the kind of segment that Tata ELXSI serves. For example, the kind of work they have done in OTT and the OTT analytics, that's something LTTS hasn't done. Okay, so they don't have capabilities in the OTT content management, OTT analytics. So their Falcon app, which is a product by Tata ELXSI, it's a very pioneer product. So you have to see that which segment you understand better, and then you align yourself with it. If you look at metaverse theme, for example, which I wrote about in my Alpha newsletter very recently, the augmented reality capabilities that Tata ELXSI has developed as a part of their automobile vertical, that they are in a position to leverage that technology and make most of all these metaverse related opportunities that would eventually be opening up. So I'm not getting into a debatable discussion whether metaverse is real or not, but the point is telematics, then computer vision, and then augmented reality. These three spaces, Tata ELXSI has a lot of edge over LTTS. So if you see and if you compare LTTS and Tata ELXSI into different segments, you would see that ELXSI is better in one of the segments, LTTS is better in another segment. So there is really a very difficulty in terms of picking these businesses. So if you take retail, for example,
So the augmented reality related adoption in apparel retail specifically, that's growing very tremendously. The video analytics and the smart shelves, understanding when a customer is standing in front of a shelf, which is the shelf where customer spends most of his or her time, right? So what is the percentage? Like I spend 90% of my time looking at a shelf which is at direct line of sight with me, right? I don't look at the bottommost shelf. For some people, they always look at the bottom shelf because that's where the cheapest products are usually kept, or the self labels that retailers have in the grocery retailing. So they keep the self labels at the bottommost shelf. So consumer is kind of trained to look at a certain shelf for certain kind of products. Driving analytics from this, gathering a raw data, harnessing that data to build products is something what is happening in retail. And if you look at the apparel retail, the virtual shoppers experience, which is currently, I haven't seen whether it's there in the India, but it's there in Europe. So what you do is you just stand in front of the mirror, which is an AR enabled mirror, and then you just choose a generic. Generic is basically, let's say you want to buy a jacket. So jacket is your generic, and then you select a variant. So your variant is size 36, shoulders this much, color that, style this. So you choose a variant, and then you just stand in front of the mirror, and it would simulate an experience as if you are actually wearing it. You can actually move your hands, move your body, and that jacket would be on you. So that is developing here in Europe at a very rapid space. So in this space specifically, Tata ELXSI has lot more capabilities than LTTS has. Long story short, if you are a bit about the digital transformation that's happening in the retail space, or you're a bit about the changes that are currently happening in the OTT and the media and the telecom space, and the augmented reality space, I think you would not really repent on investing in LTI or LTTS. So it's one and the same. Valuation wise, you can go and cherry pick. I want to invest here, I want to invest there. But I think this is how this entire ER&D space is placed at.
Very interesting. Ameya, how come you know, since you have developed such a deep understanding around these companies, how come you didn't look at tech companies listed in other global markets?
Well, to be really honest with you, I just track Accenture because that is kind of a benchmark when it comes to technology consulting or the digital transformation. Accenture also is very, very strong in the retail space. So when it comes to retail consulting, Accenture actually has a very strong capabilities. It's very interesting point that you have touched. So if you look at what Accenture has done over past number of years, you would see that they saw this digital transformation and the cloud transformation journeys coming up with an aggressive pace. And even before COVID hit us, they were strategically positioning themselves into this domain since quite a long time. And as soon as COVID hit and everybody went digital, everybody went remote, they were absolutely positioned to make most of that opportunity. And that is why you see the Accenture is, upping their guidance so significantly from 12 to 15% growth to 19 to 22% growth on such a large base says something. Right?
Yeah. So to be really honest, I don't track many global businesses. There are only selective businesses I track. And I track those because those have direct correlation with the portfolio that I have in the Indian equity space. So I was just talking about how Accenture positioned themselves and kind of not positioned, kind of repositioned themselves to make most of this cloud journey and the digital transformation spends that all the traditional organizations would be doing. That's precisely what LTI did. So if you look at the way they acquired companies like Limbic and Power of Your Cloud, and strategically they created a cloud vertical which basically serves
almost every hyperscaler which is available out there, and they serve at a platinum level, right? So they are kind of mimicking what Accenture did at global level, and they are doing it at the Indian paradigm. So from that perspective, I track Accenture very closely because it's the global leader when it comes to consulting and strategic implementation and so on. So that's one business I track. Then there's another business I track is Shopify. I do that because I used to work as a freelancer as a Shopify developer for quite some time. So that's another business which I track. And because of SaaS, of course, even though I have read a lot about the other businesses that are currently listed in US, I find somehow that there is a strategic change happening in Indian markets. We are always so eager to look at the Western world and chase the growth in the US markets, for example. And the stocks are, they have already given tremendous multiple return to their investors since the inception. What we royally miss is how our domestic IT technology business is changing its gear. It's living its old skin and transitioning into something very different. So if you see, sorry, I'm kind of digressing from the original question, but I'll just take a
No,
minute.
please go ahead. Please take your time.
So if you see, traditionally, Indian IT companies were only outsourcing companies. They would do body shopping, nothing else, right? So they would negotiate on a price. Whoever is giving the lowest price would win the project. So there was no USP, there was no edge, there was nothing. Eventually, when this saturated somewhere in 2008, 2009, companies understood that this cannot go on forever. They need an edge in market to ensure that their revenue scale is visible over like 5-10 years. So what companies started doing is they started building accelerators. So, and basically what you call in a programming language is the reusable piece of code, right? The reusable component. So when you build a reusable component, let's say for example you are developing a text reading or a document reading product, but you don't directly go and build that product. Initially, what you do is you build an OCR, which is an optical character reading, for example. So you call that as an accelerator and use at multiple customers' location. And from that experience, okay, my OCR is stable. Then you add 2008, there's something strategically changed the way our IT companies were doing their business. They focused a lot on building these small reusable components that they would call an accelerator. And you would put multiple accelerators together and you would call a rapid deployment solution. So you would take that solution to a customer side. And traditionally, if you used to take, let's say, 10 months to deliver certain things. With the rapid deployment solutions, you would take less than 6 weeks. So there was a clear value proposition available. And when you put multiple rapid deployment solutions together, you have a product. So that transition is happening in our IT companies. So if you look at TCS, for example, if you look at LTI, for example, you would understand that these companies have strategically transitioned from reusable components to accelerators to frameworks, then to products. So if you look at the Digitate, which is a SaaS-based offering by TCS, they literally operate it as a SaaS startup. Okay, Ignio is already clocking 1 million in ARR. If you look at it, if you look at Canvas or Mosaic or Lenny, so these are all. Unitrax is also a SaaS-based product offered by LTI. There is ICX, which is a SaaS-based offering from Tata ELXSI. So I'm more interested in what is happening in my own backyard than going and chasing alpha elsewhere. I understand. See, it's as simple as that. जितना मैं मेरे मार्केट को समझूंगा उतना मैं दूसरे मार्केट को नहीं समझूंगा. I understand my own market way better than I would understand some other market because I haven't lived in US. I don't see US markets day to day, but I have lived in India. I'm from India. I understand how people think, work, how companies think and work and operate. So the comfort I have in terms of understanding my own companies is much more than how I understand US companies. So to be really honest with you, I don't look at US companies from very heavy investment perspective, but what I look is how US companies have managed to generate value, where value has accrued in technology, and who else is doing similar thing in India. So that's where the maximum value is available today. So if you see a company who is able to get the most share of such value added contracts, you just have to position there, and the alpha generated in that company would be much higher than chasing any other company in the US. That's how I think personally. That's how it has been so far. I hope I answered that question.
Yeah, absolutely. And I think that was so interesting how you were able to break that down for us in terms of, repeatable pieces of code and then these accelerators that come into play and then frameworks. I think that was really helpful to be able to understand in order to see where we are in terms of development, as a country, as far as our IT sector goes. Uh, this is more like an overarching question, but there has been a lot of complaints, from Indian investors about the fact that Indian IT companies are not product companies. So, do you see that changing? And if yes, how?
Yes, absolutely. And it has changed tremendously over past so many number of years, right? So almost every other company, if you take LTTS or LTI or TCS, uh, Newgen, Intellect Design, everybody is having a pretty strong product portfolio. Okay, it's not that our Indian companies are not product companies. That is not really a kind of a true statement anymore. Uh, so if you look at Tata Elxsi, I already talked about their Falcon Eye, which is an OTT analytics product, and it's a product. It's positioned as a product. ICX is also a product which they have positioned in the SaaS space. Intellect Design already has, and Intellect Design is a pure product company. Newgen Software, if you look at them, it's also a pure product company, right? If you look at LTI, then they have Mosaic, Canvas, Lenny. Infosys itself has so many different number of products which they have already positioned, Edgeworth and Finacle and Panaya and so on, right? TCS has Digitate and Ignio, and even the recent they are building as a platform, not necessarily as a product, but they are building it as a platform, which is called as Quartz. So Quartz is built as a startup, grown as a startup, operated as a startup, primarily in the blockchain space. And the kind of work that they are doing is next to none. There is no other Indian IT company who is doing the work in the blockchain space, which is as quality as TCS is doing through Quartz. So it's not really a true statement. So like that transition is underway. Of course, we don't have a pure play product dominance per se in the way US product companies have, but there is a lot of transition happening in our own Indian IT companies. It's just of matter of looking at the companies little differently. That's all. So if you go to individual company websites and you dig a little bit more deeper, you would see that our companies are slowly positioning a lot of their products. And that is the next value driver. So if you look at, like I mentioned earlier, the Quads and the Ignio and the Lenny and Canvas and Mosaic, SEL also has some products in the lifecycle division. Wipro has a very interesting product called Molecule 360 and DICE, which again is in the pharmaceutical and drug discovery space. So it's not that we don't have any products, it's just that there is no awareness yet.
Absolutely. I think products have started to play a role, and as time goes on,
Also, if you look at Tata Communication, for example, so communication is a very interesting space. Communication, not necessarily communication as a layer or communication as a platform, but communication as the entire accrual of value,
your internet protocol stack. So when you are primarily going digital and cloud, your cyber security is very different. Okay, it's not the same. It's very different. You can't have a traditional antiviruses and traditional anti-malware softwares run over your cloud or your so the change here is this. So when it comes to cloud, there are multiple segments, right? So segment which is called as infrastructure as a service. There is another service within it called as a platform service.
So the difference between these two is the platform as a service takes care of certain activities that infrastructure as a service can't take care of it, right? So when you are in this cloud and digital paradigm, your cybersecurity is very different. So you need a solution which is basically a zero trust software defined, kind of a product. So a solution which continuously monitors all the traffic. So traditionally, kya hota tha? Companies would work in a WAN paradigm, which is a wide area network, right? So any request which is generated within WAN is automatically trusted. But that's the old paradigm wherein you had on-premise software deployment model, right? But when it is a on-premise paradigm, but when it comes to the cloud, you can't use the same logic or same kind of a security that WAN provides. You need a solution which is basically a zero trust. That means regardless where the request is coming from, you would not trust that request. So Zscaler is a solution which is kind of a market leader in this space, but it's not listed in India. Even though it's an Indian company, it's not listed in India. It's listed in US. The only second company which has a product-based offering in this is Tata Communication, and they offer it through their proprietary product called as Net Foundry. So it's just matter of awareness, right?
Yeah, absolutely. I think Ameya, you brought in a lot of perspective. Some of these products I was aware of, but the vast majority of them, I think you brought to our audience in a new way today. I think this is the maximum number of compliments I've got for a speaker while the session is going on, and maximum number of requests for when the next session is going to happen.
Thank you so much for that.
Yeah, Ameya, next, maybe can you draw like a top-down perspective of what no-code looks like, how you see it evolving, its role in India, and then finally, how is NewGen a play on it?
Mm-hmm. Yeah, sure. So when it comes to low code or no code, there is something you have to understand first. So if you look at business as a cube, okay. So at the core, you have your functions which impact your cash flows, right? Your profitability. So all those functions related to the core business processes, they belong at the center of your cube. Okay, so those are, we call them a core business processes. And the business processes which are at the edge of the cube, which not necessarily impact the cash flow or the profitability of the company, but it helps the core processes fill in the gaps which are arising due to the digital transformation related changes, right? So the no code, low code space fits on the edge of that cube, if you are able to visualize that. So no code, low code is again a developing paradigm, and no matter what Gartner and the consulting companies think how the no code, low code would grow, but you have to always take that with a pinch of salt, because if you choose a wrong partner who is delivering a no code or a low code solution, your technical debt can grow out of hand very, very rapidly. And because even though it's an edge process in terms of the business queue, it would start impacting your core business functions very soon.
And the only way out then is to scrap it, buy another product, or build a legacy capability within the company. So here, the key deal is customer referencing and how has their experience been so far. Low code or flows, there are workflows. Even if you take retail, for example, uh, how do you price a particular product and whether how the price is approved for a particular given market? That product itself and that price itself goes through a lot of different workflows. So whether a country head should approve a price, or a regional head should approve a price, or a store manager should approve a price. So if you see, there is a lot of manual processes involved here. And this is exactly where the low code products come in. They take off all the manual load from your plate. They automate all these processes, and that's how they basically help your core business functions. Newgen, if you look at it, Newgen primarily operates at the edge of that business queue. So automating your workflows for customer onboardings, supply chain related edge processes. For example, tracking the inventory, managing the inventory, tracking the shipments and the logistic and the payment terms of a particular vendor. For example, there is an invoice, right? So every invoice and every vendor has a payment terms attached to it. So payment terms is basically that describes ki kitne din mein isko paisa dena. So usually what happens at any given company, there are so many numbers of thousands of invoices which are coming at the end of the payment terms. And if you don't pay your vendors by then, naturally there is a friction between you and your vendor, and that impacts your cash flow because the vendor will not give you a good rate anymore because you're always delaying the payment. So at such edge processes, what these low code and Newgen related, so the products that Newgen has, through their notification management and the workflow management processes, they automatically give you a functionality to trigger the payment to such vendors whenever a payment term is coming close or a nearby. Then there are a lot of document management and reading the text from the invoices or the claim documents that has come to you. So you have to read these documents manually, right? So when you read these documents manually, somebody would be sitting there and deciding, okay, this particular claim needs approval from this person. So Newgen kind of positions into this space. They have capability to implement a decision flow through their products, and they would let that product decide, guide, and route the documents at a respective business owner. So that's how Newgen is positioned, and it's working pretty well in my view. If you look at the global scenario of low code, no code companies, eventually what happens is they are eventually acquired by a big daddy, big technology company. So AppGiver, I don't know whether you're following the enterprise no code, low code space or not, but AppGiver was a very promising company in the enterprise scale, which would give you a functionality to build microservices based architecture. And that's completely no code. So no matter you understand what microservices are, you can just drag drop a few things here and there on the dashboard, and voila, you have an application which is built through a microservices, which is based on a microservices as an architecture, right? So SAP acquired it at a very, very high valuations, and they integrated into their HANA Cloud platform products. So similarly, what happens in case of Newgen, I'm not saying that it will be acquired, but they work with lot of system integrators and the consulting partners like Deloitte, KPMG's, McKinsey, Boston Consulting. So they're always on their vendor list. So whenever somebody, let's say a traditional company or an automaker is coming and saying, hey, I need my invoices to be handled automatically. I don't want to deploy a manual person to take care of this. Which product can you recommend? So that's when they basically recommend Newgen. The product comes in, they implement, the partner takes the cut and they go. So they are growing organically through this association very significantly. And I see this space is very, very promising. But as I said, you have to take it always with a pinch of salt, because if you select a wrong product, there is no going back because you just can't customize it. There is no functionality available to customize it. even a low code product which has certain bit of functionalities where you can customize a logo and a color and the number of certain clicks and the number of screens. When it comes to no code, there is no scope for customization, absolutely nothing. So you can't customize anything. And if there is no product and requirement fit, your technical debt goes out of hand. You have to take a lot of write-offs. It impacts your cash flow. So you have to take it with pinch of salt. Sorry for the long answer.
No, please. I think the circle of competence we're trying to take, few drops from your circle of competence and trying to add it to ours. So I think as much as we can absorb today, I think will be, for me also as a learner is going to be really really beneficial. I think it's very granular and very in depth sort of understanding, which I think even the listeners very much are appreciating. So with that, would it be fair? Please go ahead.
No, I just said happy to know the feedback. Yes, please go on.
Yeah. So with Newgen, would it be fair to say that their no code and low code solutions are primarily towards business process automation?
Yes.
In areas like invoices.
Not necessarily invoices, but document management, workflow management, process automation. So it's more on the edge. So whatever processes that sit on edge of which are your edge business functions, that's where Newgen is positioned.
And that's different from software development or front end design and things like that.
Yeah, absolutely. So see, the thing is, people always say ki, this is an edge process and there is no moat. TCS can develop this product tomorrow and disrupt the space. But the real question to ask is, if it is so, why TCS or Infosys hasn't done this so far? Because it's just like reinventing the wheel. And the time and the efforts that these companies would have to put in developing a similar solution, it's much cheaper to work with a company like Newgen, for example. So no matter who says that there will be disruption from big daddies, I really don't think so that's going to happen. So it's just you work with vendors. So for example, if you look at LTI, and there is a company called KSolves. So LTI outsource lot of Salesforce related work to them. So it's very easy to say that the space in which KSolves operates, it's very easy to disrupt. And why would LTI not do that by themselves? But if you look at the entire thing as a machinery and all these moving pieces, our industry is in lot of sync and harmonization. Nobody is looking to disrupt anybody. Rather, people are looking, how should I cut my go-to-market time? That's what is the value proposition. Who will give me the best deal? कितना time मैं cut कर सकता हूँ? The speed of delivery of the value has more meaning than value itself.
Absolutely. I think time in is so important because, even when I look at companies, what I try and see is there an at least 18 to 24-month period between them and their nearest competitor? While they might be able to compress a little bit of that, it's very hard to see, a gap that is that large getting fulfilled because a lot of those things aren't solved necessarily easier by scale.
Yes.
Would you agree?
Absolutely.
Yeah. So, Ameya, also in terms of looking at Root Mobile, what made you get interested in that company?
So if you look at the rise of our startup ecosystem, and you correlate that with the time when Jio launched their digital services, you would see a direct correlation. The number of unicorns you see, and since the availability of the reliable communication as a platform has gone up. So if we are reimagining future as a connected car, so when we say connected cars, what it is, what is it? You can't have a situation wherein you are driving on a highway and a couple of cars are not connected.
that would completely mess up the entire connected car, narrative, right? When we say connected cars, every car has to be connected. So what I'm trying to drive here, the point I'm trying to drive here is for imagining the future as always connected, always mobile, metaverse, connected cars, yeah, whatever we are talking about so far, right? You need a very, very reliable communication platform. I'm not saying that Root Mobile is the only one who provides that. Tanla also has a lot of solutions and platforms. So does Tata Communication, and there are small other companies who offer this. So what I saw is, okay, I in my portfolio I had companies which are transitioning from a pure play IT into a value added kind of a scenario. And then I started looking at, okay, the next value is going to accrue on communication. 5G rollouts, always connected systems, the growth of the IoT platforms and Industry 4.0. If you see this entire paradigm and put things together, I can't emphasize the importance of reliable communication as a platform more than this. You need a very, very, very reliable, secure, real time, not near time, real time, not near real time communication platform. So the importance of communication as a platform or communication as a layer is very important. So if and that's the only kind of a hindrance in achieving something that we are imagining, connected cars.
Absolutely, Amaya.